Hello, this is Richard Wilson with a investor mandate interview. We're here today with Giampaolo. Welcome.
Good day, everyone. My name is.
And what type of investor are you?
I'm the chairman of a family office, so I'm a serial entrepreneur and venture capitalist, a private equity, former board member in investment banks, both in the U.S. and Europe, and we invest globally.
Okay, great. And in terms of where you spend most of your time, is there a certain type of client you're serving, or how does your business model, really operate as a family office?
Well, we don't have client per se. We have partners who are co-principals with us in the deals that we do. The single family office works only for our family.
Okay. And in terms of the investments that you're typically spending most of your time on, a lot of multifamily offices help with traditional stocks, bonds, ETFs, doing due diligence on fund managers. Some of them help with multi-generational planning, but very few of them work on direct investments or direct allocations for families. How does that differ, or how close to that model is your family office?
Our single family office, I think you were right on the money, Richard, was born just to steer away from mainstream private equity and focus on direct investments. When I started a family office, I had already spent 15 years across the pond in investment banking and private equity. It was long enough to have seen some of the distortion that the market had or the industry had, better yet. And I said to myself that I wanted to diverge from what it was becoming a mainstream model. And I thought that we had to nosedive private equity a little bit to the level of where venture capital used to be, because now the same that I used to apply to private equity 15, 20 years ago, it applies now to venture capital, with venture capital firms becoming larger institution that banks like. And, back then, private equity was in the doldrums, and a lot of sophisticated investors were dissatisfied. And it's not about the fees. People think, strangely enough, that it's for the fees. I mean, of course, if we can save some fees, it's always nice, but it's not for the fees that people are dissatisfied. It's the fact that you don't get any result out of the compounded fees that you pay. So the reality is we wanted to invest directly. And so I gathered a family and we started a family office on that, pre-requirement and premise. And don't forget that most of the investments that we wanted to do were on emerging markets, because, I had experience on those markets, primarily in Central Asia, former USSR, Southeast Asia, South Africa, the Emirates. And for me to go on a direct investment contained a certain degree of safety. First, because we started all deals on a greenfield level. Right. We had to de-risk the venture. On emerging markets, of course, by definition, you have a higher risk than on developed economies. On the emerging markets, they would sell you just pretty much anything and would get away with murder, because especially in a lot of those markets, that's how it's been for eons. So how to de-risk the venture was the biggest equation that we had to solve. And the only way that I knew how to de-risk the venture was to start a new venture. At that time, the investment holding had been created by us. It would withstand peer review. The due diligence on whoever wanted to do it, colleagues of any parts of the world, would have been a breeze, because it's a new holding company and it's going to do this. So what else there's to explain and to evaluate? And again, of course, we were targeting more patient money, having invested primarily in infrastructure, and I will tell you a little bit what we've done. But I found at the end of the day that was a model that went down well with really all the categories of investors across the spectrum, because we had with us institutionals, strategic investors, multinationals, other single family offices, ultra net and high net worth individuals, so even the private, accredited investors, and investment funds. So really, I had all the colors of the rainbow, as I said. And steering these ventures through was quite an adventure, quite an experience, and also has been quite a lesson. That's what they call now the Parigi formula in the market, and they invite me to conferences all over the world. But the reality is, I don't think I've invented anything. I think I've taken the good models that private equity could offer about the de-risking ventures, and I input the corporate governance in every venture that we did, and also full market compliance standards. And why? Because we wanted to exit at the same multiples that we would have achieved exiting on Western markets.
Right.
Because in emerging markets, you can get in very cheap, but then either you're stuck with your investment till, debt do part you, or nothing. Basically, maybe you end up being in the control of chronic capitalism, let's call it like this, and then we wanted to steer clear of any potential distress or disturbances. So we've been quite meticulous to a point of becoming fastidious on our venture building, but I think it's been appreciated. And not all the ventures have been a success, but we have been successful where we wanted to be successful on the large ones, which we have monetized and exited. So we, for all practical purposes, we've completed the loop. Starting the venture, being the sponsor, the principal or co-principal, running it and exiting at the time that, we felt that we wanted to exit. Sometimes even before the completion due date, because of course, I define myself, Richard, the sort of a basement type of investors. I went to do the dirty job that a lot of colleagues don't want to do, because obviously starting from greenfield, you got to brace for a lot of sacrifice that others don't want to face in our industry. But as soon as they begin to see the design materializing, well, sure enough, the offer begin to pour in, and of course on those offers you can make the market because you have the upper end. Thank you.
Right. No, that makes sense. And right now, for the investments that you're focused on, what's the geographical scope that you're most excited about putting 80% of your energy into?
Well, we're still looking at investments on a global basis, but primarily we're focusing, across the pond, obviously, because the world nowadays, and this is even before COVID-19 came into play, the world isn't what it used to be 10 years ago in terms of globalization. We got entire portion of the economy that are under sanctions, that are countries such as Turkey that used to be the darling of the market and in the moment are in quandary, and Middle East is at war. There's a lot of situations that are not really very conducive to, let's say, taking a look at a lot of territories where to start greenfield. So we've also had, on a different part of the group advisory business, so we do it around the world with clients in 5 continents. But as I say, when it comes to greenfield investments, for the moment, we're sticking to the European Union and the United States. But of course, with a view to re-expanding when conditions will allow.
Sure. Okay. And my last question is about the number one type of business, type of opportunity, or a niche within a niche that you're trying to source more than anything else in terms of a type of operating business or type of greenfield opportunity. What could our members bring to you that would help you meet that goal, that investment objective?
Historically, we've been investing across 4 verticals, and those are maritime infrastructure, both mobile and fixed assets, fleet, marinas, ports, shipyards, doing also some successful turnaround on those. And the second pillar was the prime derivative of the shipping industry, which is advanced logistics, transshipment ports and centers. The third has been renewables, and the fourth has been healthcare, primarily senior homes. What I'm looking at now, it's again more technology. I used to be a principal in a VC firm in Silicon Valley for over 10 years, and of course we used to do primarily technology over there. I must say that in the last year, I've seen a resurgence of interest in technology, and so we're also looking at technology deals. And I think a single-family office, more and more, whether run by millennials or by baby boomers, are also beginning to shift to this, as Europe as well as trying to catch up in the United States, and there's India and China also that are coming up. So there's a lot of interesting proposition on the technological space that are interesting for investors like us.
Sure. Okay. And what would be your number one piece of advice for other investors listening here? Maybe something you wish you knew 20 years ago that would help somebody who just started their family office or who's just kind of formalizing their family office right now?
Well, for sure, persistence. Just persistence is the name of the game. All other quantities being equal, because at the end of the day, whatever advanced know-how we all have, it's a commodity. And
Right.
so it tends to be commoditized, and it only loosely correlates with the job at hand. So I think we need to adopt soft skills, and one of them is resiliency and persistence, really, to be flexible, because we live in a liquid environment. And again,
Right.
this is not because of the contagion, but it's just always been liquid. The market is like, the ocean. There's always waves, and like the atmosphere, there's always turbulence in the air. Nothing ever stands still. And I think we tend to categorize with our mentality, because we need the comfort zone, but the reality is there's no comfort zone. But so I think, being persistent and having a clear strategy at the end of the day does the trick.
Yeah, I think that's great. Nobody's brought that up out of the 70 investors I've interviewed. No one's brought up that point before, and I think it's a great point. So appreciate you sharing that. What's the best way for someone to get in touch with you if they have a project they'd like to work on with you, or they want to submit a deal?
Well, they can reach me via email and via LinkedIn, and on my personal website is and or via email address is.
Okay, great. And if anyone has trouble getting the right email or finding him on LinkedIn, just like with any of our other investors, you can reach out to my team. We're happy, as long as you're a charter member of the Family Office Club, we're happy to get you in touch with him in terms of getting his email address, at least, so you can reach out easily. So thank you for your time today, Giampaolo, and we're happy to have you in the future, maybe on one of our virtual investor discussion panels coming up.
Thank you so much. I look forward to meeting you. When conditions permit.
Sure. Yes, of course. Yeah. Take care and stay healthy.
Yeah.
Bye.